Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Glorick and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hey, Leafy Legaler podcasters. Welcome to today's show of Leafy Podcast. I'm here with my co-host, Brian Price, who is CEO of Leafy Legal Services. And of course, I'm your host too, Jennifer Glorick, and I'm the COO of Leafy Legal Services. And today we have on a great guest. We always have great guests, but I'm very excited to talk to him. He's a fellow Texan like me. He's the president of BV Capital. He oversees operations for the company, and it's a privately held real estate private equity firm in Dallas. So they create private investment opportunities in commercial real estate for accredited investors. And of course, we're always looking to diversify our portfolios and find out more about different investments and how we can grow our wealth. So let us welcome Rob Anderson to the show. Welcome to the show, Rob.
Hi, Jennifer. Thank you.
Awesome. Yeah, welcome to the show, Rob. Why don't you give us kind of an overview of how you started BV Capital, what you guys work with, and then kind of some of your background as well to get how you kind of got into this this world of real estate capital.
Sure. I'm a little different, Brian, in that I'm not a real estate guy. I'm just an investor, and I found something really fun to invest in. Right. I got securities license back in '98, and I've been on many Wall Street firms over my career. And I always tell people if they think they're diversified because they follow the 9 style boxes that Morningstar pushes out, or they do this and that, but they're 100% in the stock market. That's not diversified. That's just, you have a giant basket and your eggs may not be right next to each other, but they're still in the same basket.
Yeah.
So I argue with people all the time, you're not properly diversified. So my parent company, Bridgeview, is a real estate development firm. They've been in business 11 years. And we build and develop multifamily, mixed office, commercial, industrial, et cetera. And like most real estate firms, they went to institutional money to do their deals. Or they went to the country club, pick your city, pick your favorite country club, and that's where they raised their money. What we did about a year ago is we pivoted and we purchased a broker dealer, and I run that. Now we actually market directly. And obviously with 506C coming on, which I'm sure you guys are aware of, we now market directly to the public of accredited investors so they can have access to this as well as to the brokerage community. So a little bit of a pivot for most real estate firms.
Cool. So how is that, what are you doing differently than maybe what most people do?
Well, we see, and I don't know how well you know, so I'm in Dallas, and there's a real estate person on every block in Dallas. It's hilarious. So we see a lot of these folks, and most of them, they'll go to, so here is Dallas Country Club. Pick your city, and you'll have the best zip code, the best high-end generational wealth area, and that these deals don't leave those neighborhoods historically, right? So prior to crowdfunding, prior to the clarification of the Jobs Act, you had to go through a private equity firm, or you had to know somebody in commercial real estate to get access to actually invest in something like this, right? And so we still see that. We still see a ton of that. Now, granted, the crowdfunding platforms have started to really gain some momentum, but the majority of America still don't know they exist. And they still don't know shops like we exist, because unless they live in the right zip code or they belong to the right country club, et cetera, you still don't have access to a lot of this stuff, is what we've seen.
This is really going to open things wide up for accredited investors who've been looking to diversify outside of their little niche. It's not like it's a big world of accredited investors. It really isn't as big as you think it is, but it is very diverse, and they're always looking. When we talk to people who are experts in family office, and their entire job is searching deals and vetting deals for their bridge of clients to try to see what might be good. So it does open up a lot of things. tell me a little bit about why do you feel so for anyone who's listening, this could apply, but why do the wealthy invest in real estate? Because we always want to see what successful people are doing. And usually
Absolutely.
The people who are wealthy, you think, okay, well, you've had some success in this. So why do you think historically and now, especially now with all the instability, real estate is still so hot?
Jennifer, I talk about this almost every day. Think about if you go through history, the wealthiest people in history, what was the majority of their wealth made up of? It was real estate. And if you stop and think about that, why? And the problem is, like I was talking about earlier, people don't have access to it. Or historically, they didn't have access to it, but the wealthy did. Because you needed a large sum of money, you needed a lot of capital, and you needed connections, and you needed know-how, right? So back to your question of why is, think about what we all saw in March with the stock market. You had a fear-induced panic selling sell-off, being a little redundant there. Right. But, when you have a daily traded vehicle like a stock, bond, mutual fund, or security, fear can take over and they can crush your value overnight. Well, if you own an office building like the one I'm sitting in or the one where you guys are, that doesn't happen. Cap rates don't change overnight. And so having an asset-backed investment, the wealthy really, really appreciate. So if everything goes wrong, they can still sell the building. They can still sell the assets. You have an asset backing there. You have, the main reason is diversification. So you have a lot of people, I was talking about it earlier, they think, I'm in large cap, small cap bonds, et cetera. You're still in the public markets. And if you don't have money in the private markets, you're not truly diversified. What do I mean by that? Liquid, illiquid. You've got to have both. I was listening to a podcast this morning from NerdWallet. You guys heard of them? And yeah. The lady was, it was really interesting because there's a lot of investing psychology that a lot of people miss. And what she was saying is you need to invest somewhere you can't touch it. Mm-hmm. I thought it was really interesting. Well, the beauty of illiquid investments such as real estate, you can't touch it. So our deal may be locked up for 3 years, 5 years, 7 years. And that's actually helped me personally. And I've made a lot of money in my past life, but I would always invest in commercial real estate because I knew it was going to be there. Right. Yeah. And so it's just, that's more of a psychology thing. That's not necessarily the wealthy, but the wealthy is really about asset-backed investments, diversification, and then most importantly, the tax advantages. There are massive tax advantages to real estate.
Mm-hmm. Yeah. Especially when you look, go ahead, Brian.
Oh, yeah. So with the commercial real estate, where do you see it going in the next 6 months? I know there's a lot of concern with small businesses going out of business and such. But now that we're kind of coming out of that, what do you kind of see as commercial looking like the next 6 months or beyond?
Brian, that is incredibly regionalized. The answer to that should be regionalized, right? Okay. It really depends on where you are. Mm-hmm. I like to call it your real estate. When you're really looking at something, you have to look at the micro GDP of a 5-mile radius of what you own. Okay. Because what happens in Southern Cal is not what happens in Dallas or Galveston or wherever you are, for example, right? It's very localized. Now, broad stroke, retail is hurting, not as bad as people think, but it is hurting. It depends on the type of retail. Mm-hmm. The biggest problem we have are hospitality, the hotels. We have very good relationships with a lot of lenders, and our poor friends in the hotel business are really struggling right now. We were about to break ground on a hotel, and we're so glad that we didn't yet. So that's going to be a problem. How comfortable are people jumping on a plane? Have either of you traveled yet?
No, I haven't traveled yet.
I know one person who has, and I made him stop and tell me about the whole experience. So,
how was it?
He said it was weird. And just like anything you do for the first time, even though it was familiar but unfamiliar, because you kind of get used to it. He said the plane was about half full, but that's my point, right? When are we?
Wow! Now I want to travel because getting a half full plane, that'd be like freaking great. And I love to travel.
Like cruiser. If only it was. But to that point, when are you comfortable going to a hotel again, right? Mm-hmm. And so the hospitality, she's going to struggle. I would definitely wait there. Senior housing, that's been a really tough spot. With what's happened with the COVID-19 virus and senior housing facilities. So, that's a struggle, obviously, as well. We are very bullish on two things, multifamily and industrial. Okay. Multifamily, for all the reasons we all know, if you have 300 units, you've got 300 employers helping you pay your rent. So you have diversification of income. You also have a dynamic with the millennials where they just don't buy houses right away, right? And they want to rent. You have a lot of empty nesters that are moving back into renting. They're tired of the upkeep. It's really interesting dynamic depending on the class that you're in. And then you have obviously the lending standards and what's going on there. So multifamily long-term, we're still very bullish on. Industrial is the absolute hottest sector in the industry right now. I saw a graph I'd be happy to share with you guys. Everything tailed off over this past 3 months, with the exception of industrial is a straight line.
I would think industrial, after everything we've seen with our supply lines, industrial and manufacturing and warehouse facilities, I mean, I'm watching that quite then because it should be going through the roof. We can no longer have a supply chain dependent on, hostile foreign nations, and now you can't even get, any of the products, even now. I mean, it's months and months and months. And you go to a grocery store and it's like this weird off-brand of Clorox and, no Lysol, no wipes, like just basic things. And you're like, wow, we really sold our country out. And so I know that there's a lot going on to ramp up to start bringing not just, those products back to where we can have the products that people want, but there's a huge financial opportunity for the people who are going to invest in that. I mean, just going to be massive. Yeah.
So we have a partner company in our office that all they do is industrial, and they've never been busier. It's amazing. They've had zero slowdown. In fact, they're peaking, I guess they would even say. Not only that, the e-commerce boom. We all sat at home for how many months and did nothing but order stuff online?
Yeah.
Well, and it's weird. I was just at GameStop yesterday looking for a controller, right? So I went for lunch and they have all the boxes for Xbox and Nintendo and all these boxes as if you could buy it there. 5 people in the store or something, which is odd because right next door is a Target, it was packed. And he goes, yeah, we don't have anything in. You can't find it anywhere. So everything was literally sold out of these silly little controllers. And he said, but we can order it for you and I get the commission, but we have to order it. And I'm like, well, why won't they send it to you? He goes, I don't know. He goes, but they pay millions of dollars to put that box there with that $29.99 price on it. Yeah. And I'm like, really? He goes, yeah, they're sending us empty boxes. So there's a lot of weirdness going on. I was like, I just didn't even know why that is, but yeah. I mean, I agree. It's an interesting world that we live in, and depending on what market you are, you're getting hit a lot harder than most. But when I hear things like that, I think to myself, how are they making their money on that? Someone's making a lot of money in a new way they've managed to game in the system. And that's really the deal. When we talk about diversifying and everything else, pay attention, listen, because in this scarcity and paucity, there is incredible opportunity for innovations and pivoting to different things. So tell me about lately, what do you feel is the most innovative thing you guys have done?
Well, it's interesting. Pre-coronavirus, the market was at a huge high, and all of our investors kept coming back to us saying, we have too much risk in our portfolio. We want to de-risk. Now, these are real estate investors actually already. These aren't folks that are just kind of kicking the tires trying to learn about this. Thought that was because, everybody thought the market had peaked. And I think there's an argument right now, if you look at where the stock market is today, is it really valued correctly? And, and there's a big question mark about that because it shot right back up and the NASDAQ's at an all-time high. How does that happen considering everything that we've been going through?
Yeah.
A lot of that's technology. I understand that. But so a lot of our investors were asking us to de-risk. However, if you're de-risking, then you're no longer doing a capital appreciation type investment like a development. Now you're looking for an income investment. What did we historically do for income? We go to the bond market. Well, there's no yield. Where are you going to get? What are you going to get out of the bond market? Nothing exciting, right? And then if you look at the tax advantage side of the bond market, which would be municipal bonds, see, I always compare what we do in real estate. So like I said, I'm not a real estate guy, I'm an investment person. I always compare what we're doing to what you could do elsewhere.
Yeah.
Right. And so we came up with an industrial income portfolio we're real excited about, where you can participate in real estate income. So you're getting the rent from a large corporation, not the bond. If you follow.
Yeah.
Okay.
Right. So which is more valuable?
Yeah. Well, yeah, being able to get that rent in because, cash flow is king, and we all know that. And especially if you're trying to de-risk, then you're looking for something that's more stable. And it's interesting. I think that your background, having that finance background, is an interesting twist on things because you are able to see it from two sides when you speak to investors about, because you know what they're looking at, you know what they're being told on the other side too. Because everybody's like, invest with me. So, yeah.
Well, and Jennifer, one thing I always brag about is the amount of investment houses that have invested with us. And a lot of that is due to my background and some of our team. But, every big investment house that you've heard of, we have some of their registered licensed folks investing with us.
No.
Oh, that's good. That's a pat on the back. I would be patting myself on the back too about that.
But we brag about that because that's what they do for a living.
Yeah. Yeah, so they're
that's
more
interesting.
savvy.
Yeah, I like how your background is because you're not really and that's I think that's important to know how the whole investment market works, because then you can suggest the right thing versus like, oh, you've only focused in on real estate and that's all you know. If you know more and understand, it's so much easier to say, okay, no, this is the right way to go. Seeing the world as a whole versus just a part of it.
Yeah. And the right way for one investor isn't always the right way for another. I mean, just like Rob said, some investors were looking to get more back later on, a bigger investment, and some were wanting to de-risk their portfolio. So we all have the things that we need in our life, depending on what stage we're at and what our personal goals are. So I can see the value of giving Rob a call, especially, when he can look at it from both sides and you can tell him where you're at. Don't go it alone. I know listening to podcasts is great, but you need to get into some one-on-one conversations with people if this is of interest to you and let them dig into your situation. I know we do that here at Leafy, strategy sessions all the time to protect assets, and Rob will do it for you. We've been talking to Rob Anderson, president of BV Capital. And if you want to visit Rob, you can just go, bless you, somebody sneeze here. And if you want to talk to Rob, you can go to investors.bvcapitaltx for Texas.com. Is there any other website we could shift them to, Rob?
We have all of our websites connected, Jennifer, so it's really easy. If you don't want to type out investors, you can do bvcapitaltx.com and you'll get to the same place. You just need a few extra clicks.
Okay, that sounds really good. And what would you tell an investor who might be interested on why they need to come to you guys and get and speak to you about what all the different things you've got going on?
Sure. There's a lot of good real estate plays. We're obviously not the only good shop out there. There's plenty of good shops. What we've tried to do is come at the market differently. We bought a broker dealer. That means I'm registered by FINRA. I've actually been in their offices. We have a higher standard that we have to operate from an investment perspective. Suitability is super important. I have a chief compliance officer. I have all of those kind of things that go into play to make sure that we are doing what's in the best interest of those who invest in us, not purely just in our own.
Awesome.
That's really good to know.
That's really great.
Okay. Well, Brian had something, I think.
No. I'm really fascinated what you have, and I really like what you the way you've approached it. Seems very systematic to me, and I'm kind of an engineer by in a previous life, and so I always look at business kind of systematically, and I really like what you guys have put together as kind of portfolio for accredited investors to come to you and actually find the right thing that really will help them versus just being in one thing only.
Well, I like that you're in Texas too, because, we always love our Texas people, right? Brian's in Southern California, but coming from my foundational background, like as a business builder, and I really appreciate the fact you said you had a compliance officer and you got certified at FINRA, because, those things matter. You are trusting someone with your money, the hard-earned money that you have, and you want that money to pay off. And yes, business is risk, but there are many different ways you can mitigate the risk. And one of them is seeing how dedicated the person that you're going to invest with is to their own profession and what they're doing and what they've invested in, to be able to show you, hey, look, we want this to work out for both of us. and we want you to be able to succeed. And those are the little things that if you're shopping around, those are important to look at. Have they done that? Have they made that investment? So thank you so much, Rob, for being on the show. I really appreciate it. Again, we've been talking to Rob Anderson. I cannot speak today. Rob Anderson, and he is with bvcapitaltx.com, bvcapitaltx.com. And as always, we'll have the links underneath the show. We'll have all the notes, all the information for you to be able to contact him. And we want to thank you for listening again to another episode of Leafy Podcast. We're at Leafy Legal, anywhere on social media, anywhere a podcast is heard. And please, if you're enjoying us and you like it, give us a rating. It means a lot to us. It helps us meet other people, and it also helps us get bigger and better guests like Rob on the show. So thank you guys for being with us today, and I hope you'll have a wonderful rest of your week.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.